Greetings, Scott Nelson, Senior Wealth Manager, Boulay Financial Advisors. I'm back again with your third quarter 2021 market perspective. It's been lovely weather here in the upper Midwest and good weather for getting yard work done ahead of the big chill we all know will eventually arrive. No matter what climate you live in, we at Boulay hope you're doing well and got your to-do list under control. Now, if that to-do list includes a financial matter you're not quite sure how to tackle, why not give us a call? Let's see if we can tackle it together. Now, let's go catch up with what happened in the markets in the third quarter. The stock market started the third quarter cruising along as it had through the first 6 months of the year. In fact, the S&P 500 index hit 53 new highs in 2021 through the end of August. The data that started to come out in September, though, led the markets to reassess and pretty much to wind up where they started the quarter in July. The broad-based Russell 3000 index ended the quarter down 0.1%. Small caps had a little tougher go of it. They were down 2.62% as measured by the CRSP small cap index. Global stock markets also slipped a bit. Overall, the MSCI All-Country Index that excludes the U.S. was down 2.99%. While emerging markets were down a bit over 8% per the MSCI Emerging Index. Early in September, it began to dawn on the markets that maybe this recovery is going to be a little bit unlike others that came before. The quarter did start off impressively when over 1 million people found a job in July. But when the employment report for August was released in early September, it showed a lackluster 366,000 new hires. And then the more recent report for September reinforced this trend with a rather underwhelming 194,000 hires. Still, 1.5 million people did find work in the quarter, which is the main reason the unemployment rate ended the quarter down to 4.8% from 5.9% in June. But also behind those good numbers was the fact that many people were deciding to stay out of the workforce, and which excludes them from even being counted as unemployed. Also contributing to the worker shortage is the unprecedented number of people quitting their jobs to seek out greener pastures. The other concern, inflation. It showed no sign of subsiding in the third quarter and ran a bit over 5% for the entire quarter. Despite the unemployment and inflation news, the Federal Reserve still sees the recovery moving forward, though it did dial back its estimate of the economy's growth for 2021 from 7% down to 5.9%. Additional news coming out of the Fed meeting in September was that officials would likely announce their intentions to begin tapering their $120 billion a month bond buying program as early as late November. The stock market has rather enjoyed this program beyond its primary goal of supporting the bond markets because it has also added liquidity to the overall financial system, which has been seen as aiding the stock market's upward march. Furthermore, winding down the bond buying program could be seen as setting the Fed up to be able to raise interest rates perhaps as early as late 2022 if the economy continues to recover as expected. Despite all the news, the U.S. bond markets were not overly affected. The bond markets overall moved up a bit in July and August, but like the stock market, gave up most of that gain in September. The U.S. core bond index ended up a slight 0.05%. The government bond index did about the same, up 0.08%. The investment grade bond index was down an ever so slight 0.3%. High yield, though, continued to buck the trend and gained 0.89% for the quarter. While the pandemic is causing issues, overall the economy is steadily improving, just with some bumps along the way. A positive sign in August was the 0.8% growth in consumer expenditures. Overall, the U.S. consumer is in pretty good shape, having worked to pay down the debts over the past decade. The pandemic has also led many households to build up significant savings. Now, this could explain the ease at which some folks are deciding to change jobs, but it also is a good indicator that consumers will likely pick up their spending as the supply chain issues get resolved in the coming months. Couple of things to expect to occupy the attention of the markets in the coming months include the already mentioned Fed plan to taper their bond buying program. Also, the unemployment picture will be closely watched to see how the worker shortage resolves itself. Finally, the Democrats and Republicans in the Senate will undoubtedly make the mundane act of raising the debt ceiling in December seem like a death-defying act worthy of a three-ring circus. So there is your third quarter 2021 market perspective. As always, I hope it gave you some insight on what is going on in the markets and the economy. If you have any questions about this video, please get in touch with your Boulay financial advisor. And again, if you don't have a Boulay financial advisor, please reach out to us at the phone number above or email us at learnmore@boulaygroup.com. Until next quarter, best wishes for an enjoyable autumn.